Hey everybody, hope you had a good week. Hopefully you're enjoying the NCAA tournament. Illinois barely squeaked out that game last night. It was kind of frustrating to watch, but they get to play on Sunday and they just have to survive and advance every game. That's what we need to do in March. So markets were down for the week. December 22 corn was down 11 cents and November 22 soybeans were down 27 cents. We closed on Friday at $14.63. We had very light volume all week and money flows, which caused the sell off. We did find really good support at $14.52. That was tested on Tuesday and Wednesday and had a very strong reaction, bouncing off of those levels. So that is a good support level moving forward. We want to get above the 20 and 9-day moving averages at 1464 and 1475 and stay above those to keep the trend moving higher in the short term. Money flows are bottoming out, which is good. So if we do get some bullish volume early next week, we could test $15 again before we know it. Managed money, they're net long 170,000 contracts, and they they sold 1,000 contracts this past week. So really not too much action going on. Corn closed the week at 645 per bushel. Again, low volume and money flows cause a sell-off. Strength indicators are showing some new negative trends, and that light volume did not help at all. We did find good support at $6.30. So that is a good support level moving forward. Money flows are getting oversold. So if we could get some bullish volume early next week, really would expect to retest the highs at $6.55. And if we could get above that, the next level I'm targeting is $6.70 per bushel. Managed money is net long 372,000 contracts. They bought about 4,000 contracts the past week. General updates, grains did pull back to start the week. I know when I was watching futures on Sunday night, beans tested $15.04. But news that China was going to shut down Shenzhen due to a COVID flare-up came across, and also the Russia and Ukraine peace talks also could have caused some selling off in the commodity space. But in all reality, it was due to low volume and money flows, not participating in the market this week because futures contracts, the margin requirements were doubled. So if you wanted to buy a corn or soybean contract on the futures market in your brokerage account, you would have had to put up double the margin or collateral that usually has to be there. Fundamentally, there's really no reason to be bearish commodities. We still have very limited exports going on in Europe, and especially in the Black Sea region. Argentina is also considering tightening up their exports, putting an export tax on, and there are tight global stocks right now. So this is really putting pressure on the U.S. to grow a good record large crop for 2022 to meet world demand. In regards to crop insurance, no new updates this week, but we do want to thank everybody that chose us to provide your multi-peril and hail insurance for the 2022 crop year. We have some exciting new projects going on in the office in regards to helping grain marketing and cash grain sales. So looking to implement those as soon as we can. But again, we want to thank you for your business. If you have any questions or comments, please reach out to us. Enjoy the NCAA tournament with your family. This is one of the best times of the year. So take care. Have a good weekend.